and welcome to the Bankers Tech Talk video series, looking at all things fintech. We've been going now for 5 years, and you can watch all previous episodes on thebanker.com/tech talks. I'm Joy Macknight, managing editor of The Banker, and with me this week is Mintoo Bhandari, CEO and co-founder of a new UK challenger bank called Monument. Mintoo, thanks so much for joining me.
Thank you for having me, Joy. It's a pleasure to be with you.
So I understand that Monument is targeting the mass affluent sector. Why is that? Why did you decide to do that?
Well, a couple of reasons. One is my own experience with Premier Banking in the UK. I found it to be less than desirable. It was just not serving the needs of someone who, let's say, is time poor and aspirational. And that's really the main characteristics of the mass affluent community. So traditionally, Premier Banking was targeting this arena. Now, there's a couple of other dynamics that have taken place to make this market very overlooked. So the mass affluent are really abandoned in the market because what we've seen is a movement to the extremes. The large ring-fenced banks are targeting retail deposits or moving money into their private bank. And so people that are in the middle actually have to make a decision whether they're comfortable being a part of the retail bank or adding to their capital to qualify to get into the private bank. And so what we've seen is a movement away from the middle. And in the middle was Premier Banking and SME banking. And these are the two where the cost to income ratios are very challenging for the big banks. So there's an economic reason, there's a strategic reason that they've essentially moved out of this market. We felt that there was a tremendous need, and that because technology costs have come down so dramatically, we're able to actually address this market efficiently with a cost to income ratio that actually works.
So how does Monument really differentiate itself amongst the UK challenger bank market, which is actually quite busy?
Yes, it has been a busy market. I think most of the activity you've seen has been in two elements, the new entrants. One is on the retail side, high velocity transactions, essentially targeting millennials, other people that want to use tech to do transactions, specific transactions like FX, very popular. And the other is SME lending. The SME market is also underserved. So we've seen new entrants in both of these arenas. There have been no new entrants in Premier, in the space that we're targeting. So that's one point of differentiation, but more to the point, our business model is very different. Our business model is one of getting to profitability and scalable profitability relatively quickly. And that's possible because we have a low velocity but high value per transaction model. So we're able to provide good service, take care of our customers, and essentially generate reasonable margins in doing so. So bespoke lending, things that are too labor intensive, can be done digitally much better than they can with paper, and better than they can be done with the historical approach to banking, compressed time frames. So essentially, we have a business model that's very efficient. The other is this last point about digitization, the use of technology. That makes it incredibly attractive as a differentiator. So lending journeys on the phone, we are enabling up to £2 million that can be secured on the phone. The initial portion of that process is the decision in principle. Arriving at the decision in principle before conveyancing and valuation are done. We do a lot of property-backed lending. That's essentially the target arena. That decision in principle will be arrived at in under 8 minutes. That's using technology, and we want to have a very high conversion ratio because our brand, from decision in principle to completing transactions, has to be very high for people to feel very good about using our app. So digital lending, digital deposit taking, and digital customer service. We are enabling video, voice, email, chat, and actually something called co-browsing, where if you give permission to our RM, they can enter your phone and help you complete a form. So a level of service that's been unheard of, and really we think is needed for the mass affluent community who are truly and genuinely time poor, very busy, very aspirational. Managing, balancing family and wealth creation is not an easy task. So we want to be there to enable that.
Well, that's sort of my next question, which is how do you think Monument is really going to be able to sort of make inroads into the mass affluent sector, which has been historically a very face-to-face and personal relationship-based model?
I think COVID has accelerated people's acceptance of digital by more than a few years, perhaps a decade or more. People really today would prefer to have a wonderful, solid digital experience and an efficient one for their financial needs. I think standing in a bank queue is the last thing people would want to do. But even going in to meet a banker, we think that'll still be of desire in some situations and be desirable. We think that there will be on the order of 1 or 2% of our transactions that'll involve a face-to-face meeting, relationship building. We will enable that through a lounge, perhaps more than one in London and one per city as we scale over time. Our current plan is to just have one lounge in London, probably in Mayfair, St. James, essentially have a space where people can come and have a dialogue. Most likely it'll be around a sizable loan discussion, not so much on a digital deposit. So we will enable that, but COVID has changed people's perceptions completely. People are much happier on the phone, getting things done, and moving on with the rest of the things on their agenda.
Excellent. Well, thank you so much for your insights, Mintu.
It's a pleasure speaking with you, Joy. Thank you for the time.